Choppy. That's the one word I would use to describe the stock market since my last portfolio update. And in this video, we're going to be talking about what I was buying and selling over this past month, as well as a little recap on what's been going on in the market and where I see it going forward. Looking at the chart of the S&P 500 or SPY, you'll see why I use the word choppy, because after my last update video, we crashed that Monday due to the Evergrande crisis, and then a lot has been going on since then. You can see the volatility in the market was much higher than it used to be. After the Evergrande situation kind of diffused itself, the next big issue that popped up was the debt ceiling limit. And there was all this fighting between the Democrats and Republicans, and no one was going to budge. But of course, they decided to push off the debt limit, because if they decide to vote and not extend the debt ceiling limit, well, they would basically be putting the US into total chaos. And there's pretty much 0% chance that a bunch of politicians get in a room and vote to basically destroy America. It's just not going to happen. Other economic data that came out last week was the CPI information, which came in around 5.4%, but no one even blinks their eyes at these higher numbers now, because we all have been desensitized to these higher expectations. So unless this comes in at 10%, the market doesn't seem to really react to these numbers, because the Fed continues to reiterate that inflation is transitory. Being honest, it could be 2030 and we could be seeing 10% inflation every year and the Fed would still say the same thing. Other positive notes is that retail sales actually came in higher than expected, so an increase of 0.7% versus the estimate of a decline of 0.2%. We also saw jobless claims come in lower than expected. It was supposed to be around 320,000 and it came closer to 290,000. Something else that calmed the markets, I think, is that the earnings season started off with the banks, and a lot of them reported really good earnings. So they beat on revenue as well as earnings per share, and it's pretty much across the board that the banks are seeing the economic recovery going well. What I'm trying to get at is the VIX is back to 16 and the market seems to be calming down a little bit after throwing a little hissy fit over multiple issues that were more short term, or you can say kick the can down the road. Onto what I've been doing in the portfolio, or what I've been buying. And to start off, there's two names that you probably recognize if you've been watching my videos, Apps or Digital Turbine, as well as Johnson & Johnson. These are two names that I recently did analysis on and added to a starter position. As for the other names, you have Nucor, you have Target, Teladoc, and Zillow are the other names that I decided to add more into, especially with the recent drop in these stocks, and I wanted to add to those positions into weakness. I gotta pat myself on the back for Digital Turbine, because this thing has been rocketing ever since I talked about it. In the lower 60s is when I started to buy it, dollar cost average into it, but with the stock being around 85, I'm not buying anymore at these levels unless we have a pretty big pullback. With Johnson & Johnson, it seems like it's consolidating around this 160 level, so hopefully that's the bottom for the stock, as it just provides too much value down here. We'll see. Nothing is confirmed, but it's looking like this choppy area around here is a pretty good support. With Nucor, I decided to add a little bit back into the position. Now, this is a stock that I actually trimmed my position back in June, summer months, and the reason being is that it had about 100% run up since I bought it at the end of 2020. Wanted to trim some of the profits as I thought it got a little ahead of itself, but after a few months of trading kind of sideways, a lot of that earnings is now in the company. So the valuation is kind of where I would think is pretty decent at its current price, especially with the price of steel currently still being around that 1800, 1900 level. If the pricing can stay at those levels, this company is still printing cash. Of course, you have companies like Goldman, Morgan Stanley, and their analysts coming out and downgrading a lot of steel stocks because of this fear that steel prices may retract. But what's interesting is that the valuations that these companies are trading at and the multiples are already extremely low. And even if the steel prices do retract, these companies are still making money. Target, I added around this 227 level, and it was really oversold. People were hating on retail. You can see that Target had just been selling off since 265. I already have a position in Target, but this is one of my favorite retailers. So when it was extremely oversold, I kind of got lucky with my entry on that weekly buy because it's kind of close to where it bottomed out. You can never go wrong with something in the Becky ETF. Teladoc, this was a stock that I've been sitting on for a while. Now on paper, we're losing on Teladoc. I think my average is around 160, but when it started trading around that 120 level, I decided, hey, this is time to average down in this position. I think this is a 5-year play. When this stock was trading at 140, 150, I'm just holding on, but around that 120 level, I'm adding a little bit more to this growth position that I think will do well over the long term. And very similar story with Teladoc. I did the same thing with Zillow, added a little bit when it was trading around 87 and lowered my cost basis. Now we're pretty much break even. I think a little positive on the position, but if I can build out this position with a cost basis in the lower 90s, I'm pretty happy. As for stocks that I ended up selling this past month, we have VHT, which is more about selling off ETFs. This is a healthcare ETF and going more into individual companies. It's just easier for me to manage, easier for me to value, because valuing an ETF is not really possible when it has hundreds of companies in it. This is more about getting rid of sector exposure to an ETF and focusing on the best individual companies in that sector. VTEB is one of my bond ETFs, and in previous videos I talked about lowering my bond allocation in this portfolio specifically as I focus more on stocks. And lastly, we have KL, which if you didn't watch that video, there was merger news where essentially they are merging with another gold mining company. And with that news, I didn't really know how to value the combined company. I went ahead and sold off the position, and that's why I actually had some of the cash to buy a lot of those other companies that I was referring to earlier. As of 10/15, the overall portfolio is sitting at 60,795, and you can see that the alpha generated has actually gone down this past month, and the big reason for that one is my Facebook position. Now, it is my largest position in the portfolio, and unfortunately Facebook has gone through that bad news that I talked about in my recent video, and the underperformance of Facebook has really dragged down the performance of my portfolio over this past month. But if you watch my last video about Facebook, my opinion is that this is short-term weakness, and I'm actually adding more to my Facebook position even though it's already the largest position in the portfolio. It's still under 10%, so I'm not going over kind of that rule that I have set for myself, and I just think that it's a good opportunity at these levels. If it does recover, or when it recovers, right? Well, hopefully. Then I can gain back that alpha that I lost over the past month. Where do I see the stock market going from here? I honestly think it's higher because we went through a period where there's a lot of bad news. The VIX spiked, volatility was all over the place, but it's come in a lot. It's closer to 16 now. You can see that a lot of the technicals are pointing to a bullish move in the markets. And I think unless something comes out of left field, my bet is that by the next time I make a monthly update video, that we will have broken an all-time high that we previously set. But I can pretty much guarantee that that debt ceiling limit and all the news around that will come back in the financial media, and they will make a big deal out of it. I can guarantee it. I guarantee you're gonna like the way you look. What is that, Men's Warehouse? If you did enjoy the video, make sure to hit that like button, as well as consider subscribing to Main Street Wolf, where we talk investing, stocks, anything to do with money. Thanks guys for watching, and have a great day.